First up, I'm going to invite on stage our session moderator. We have with us Sudhir, Kamath, COO, Nazara, who will be spearheading this session. Ladies and gentlemen, we're talking about numbers, financial numbers over here. Can we have a wealthy round of applause to welcome all of our speakers here? I'd like to please invite Girish, Punjabi, Managing Director at the Raine Group, Kshitij, Sheth, Managing Director, ChrysCapital, Salone, Sehgal, Founding General Partner, Lumikai Fund. So we've got all our speakers lined up here. Thank you so much for joining us. And without any further delay, as we keep arresting your attention towards these sessions, let me please hand it over to Sudhir, Kamath. Over to you, sir.
Thanks to everyone for attending this session. I'm going to refer to some notes as we speak. I'm going to start with maybe just quickly introducing myself and then also request all my co-panelists to introduce themselves. And I'm just going to ask you to maybe talk a little bit about, first, as investors, what excites you about gaming? And we'll take it from there. After that, I have a few questions for you. So just to introduce myself first, I'm Sudhir Kamath. I'm the Chief Operating Officer for Nazara. Nazara is India's only listed gaming company. The company is about 24 years old now. We listed about 3 years back. We also acquire companies, though obviously we are a strategic rather than a pure financial investor. I will now want to just request maybe Salone.
Hi everyone, I'm Salone Sehgal. I'm the founding general partner of Lumikai. We are India's most active investor in the games and interactive media ecosystem. And my journey with the games industry goes back a very long time. I've spent about 15 years in the global games industry. Prior to Lumikai, I used to be with a fund out of Europe called London Venture Partners. It was actually a fund which first pioneered investing in games and gaming companies as an asset class. So the fund and the partners had a track record, and we saw invested in over 50 odd companies, which ended up delivering over $20 billion in shareholder value. So some of the early successes were a company called Supercell, which was sold for $10 billion to Tencent, saw the journey of Unity, Natural Motion, Playfish, and several other companies that eventually got sold to Niantic or raised money from Kleiner or A16Z. And before that, built a gaming company myself in Europe. And the first 6-7 years of my career actually came from investment banking and private equity. So saw over $10 billion in M&A deals, also covered gaming, and also worked with a private equity fund out of Europe again. I'd say circling back to more current times, when I was at LVP, we'd started to see back in 2019, there was an uptick in deals from India. And while we had seen the emergence of markets like China, like markets like Turkey, like Vietnam, those similar kind of inflection points had started to take place in the India market. And that's when the idea of setting up a seed stage style fund for the India market germinated. And that's when we launched Lumikai, raised capital from several large global players. So some of the world's largest games and media companies backed Lumikai. We have since then invested in over 15 companies. And the way we look at the game sector is fairly broad. So we do content bets, which are essentially game studios. We do platform bets. We look at gaming companies which are often at the edge of frontier, like mixed reality, generative AI. We also look at companies who are using game mechanics to disrupt existing industries. And for us, India's at an incredibly interesting point. We have seen game adoption go through the roof. We are now the second largest consumer of mobile games in the world. And we have now seen game monetization tick up, right? And that, to us, makes gaming so exciting for India.
Yeah. Hi, I'm Kshitij. I am a managing director at ChrysCapital. We are a 25-year-old private equity fund that focuses on India. We make very late-stage investments. We are on our 9th fund now. We have a $5 billion AUM overall. We are obviously a cross-sectoral fund, so we're sector agnostic. Gaming is one of the sectors that we have invested in. We have one investment in the sector, which is Dream 11. And we're very excited about gaming overall. The potential is tremendous. We have several other sectors we focused on: mutual funds, financial services, pharmaceuticals, IT services, etc. We find gaming to be tremendously exciting simply because the adoption curve has been very strong. 600 million gamers. That's a tremendous amount in the country. Monetization potential is there. It's not yet occurred, But it's just a matter of time, in our opinion, because GDP per capita is directly correlated with monetization in this industry. And so, yeah, the next 5 or 10 years, we are going to be watching this space very closely.
Hi, everyone. So I'm Girish. I'm a managing director with Raine out of our office in Mumbai. Raine is actually a global integrated merchant bank which does advisory and investing across the media and entertainment landscape. And interactive entertainment is a big part of that, which is the way we define gaming. We look at things from a global perspective. So we've got about $4.5 billion of assets under management, and gaming is a big part of that. Internationally, we've been investors in companies such as DraftKings, Triple Dot, Huge, and then closer to home, I've been associated with Games 24/7 since 2019 when we made our investment in that business. And I think the rest of the panelists also mentioned, I think the timing of that was, I think, at the stage where all of us were taking a view that there's got to be some opportunity that emerges on the back of the increased democratization of access of the internet. And then we saw that the gaming companies were having a paradigm shift in their kind of unit economics and uptake, and I think give us a lot of confidence on looking at this as a sunrise sector and putting more capital behind it to drive more and more growth. I think our strategy is a little bit unique because we do have an advisory practice as well. So I think we do engage with investors on a cross-border basis to talk about other ideas and opportunities in market as well. So it's a little bit of a bias on thinking about India first, and then within India, what's exciting in the gaming space.
I think we're lucky to have such a good panel and such a good mix of different kinds of investors from whom we can get insights. The topic actually is investor insights. How can the industry build through regulatory shifts? So I just thought I'll set the background a little by giving a quick overview of the key regulatory shifts that happened last year and what we're expecting or still hoping to see in the coming year. I think a lot of this has been mentioned in previous sessions, but just to quickly summarize, I think 2023 was quite a pivotal year, right, for all of us in this segment. A number of things happened from a regulatory perspective. I think there has been clarity, at least on a prospective GST basis, which is a big thing for the industry. Most importantly, perhaps, a line ministry has been identified. So MeitY is now the ministry which looks after this industry. IT rules were notified. TDS principles were defined, and TDS was clearly defined to be on net winnings. In addition, there was more clarity in terms of digital intermediaries and also on privacy protection. So all of these things happened this year. At the same time, some regulatory changes are still pending or expected. I think retrospective GST is something which is still hanging and which hopefully will get clarified in the coming months. There has to be a bit more of a crackdown on illegal players who are still operating in this industry. And I think the government is still laying out how they plan to deal with that. While the regulatory structure has broadly been clarified, SROs have not been notified. So either SROs or some alternate regulatory arrangement needs to be put in place, notified, and put into force. And lastly, there was the GST Council statement that they will relook at the prospective GST in 6 months' time. So we're also waiting for that. So in a nutshell, these were the kind of changes which have already happened. Now, in light of that, I have a few questions for our investors, and please feel free to answer in any order you like, right? I'll start with one. So firstly, given these regulatory changes, right, do you think it's been a positive or a negative effect for you as investors when you look at Indian gaming? And how do you see the landscape today? I mean, how excited are you now versus maybe a year back, and what drives that?
Look, I think, every new industry has a period of, extreme activity and flux and chaos before regulators catch up and then they step in. I think broadly for us as an investor and the way we view the games industry is now, has gotten a lot of clarity, right? Because the first thing that the regulator and the policymaker has done has said that, hey, we're now recognizing gaming as an industry, and that's being reflected by, let's say, the animation video games AVGC commission that's being laid out. And we're also recognizing that gaming as an industry has various sub-verticals and sub-parts to it. And that clarity, I think, is important. Further, then the policymaker has gone on and said, hey, there are games which have cash-based outcomes, and then there are games which have non-cash-based outcomes. There is something called esports, which is also now being regarded as a proper sport and now become a medal sport. And the policymaker has gone and started to streamline each different part of essentially each subgenre and sub-vertical of gaming, which is absolutely the right way to think about it because the depth and breadth of gaming is extremely large. Now, there's been a lot of news around games with non-cash-based outcomes and how policy and tax has impacted that. But I think what has also been interesting from our perspective is that there's a lot of clarity which has emerged from that taxation policy. And as an investor, if I was to look at, let's say, where the red ocean and the blue ocean investable opportunities lie, RMG, let's say, and every evolution of a nascent market sees RMG behavior emerge first, where your population is getting used to digital transactions. They start transacting. They get used to microtransaction. As that gamer sophisticates, they start migrating into other kinds of gaming, which is essentially translates into casual and mid-core gaming. RMG had already become a very mature industry, right? There were large incumbents with very large cash reserves. Innovation was becoming a little bit of a problem. Rising CACs, brand equity had already been established. So innovation becomes difficult and new upstarts, it's difficult to disrupt this industry. Where does the real opportunity as an investor lie now? Casual gaming, mid-core gaming, and we're clearly seeing that behavior, right? In 2018, I believe KPMG and Google actually did a study and they said the IAP market in India was sub 200 million. Sudhir, we do a research report every year, and this year we did it with Deloitte and Google. 2023, IAPs and ad revenue has already broken past the $1 billion mark. It's 5x, right? We have 140 million paying users with a great migration towards casual and mid-core gaming. We're seeing average time spent on casual and mid-core gaming trending anywhere between 10 to 12 hours per week, which is very close to the global average. Now, as an investor, that's where the opportunity lies. And you have Indian companies who have the ability to not just build for India, but also build globally. And we've seen this. With Turkey, we saw with Peak and Gram build games for the global markets, and these were $1 billion+ outcomes. So, for us, I believe there's a lot more clarity that is par for the course. It is expected. And the fact is, we're starting to see breakouts happen with just young companies in other forms of gaming, which are IAP, ads-based, esports, which for us is very interesting. And that's why we look at the industry in a much broader lens.
Think about just the way the investor approaches gaming as an industry. And it almost felt like, the capital was all getting allocated to RMG because that's where the profit pools really were. And I think what's happened in the last 6 months or maybe through 2023 is that there's been a distinction on how investors would approach RMG and non-RMG sort of investment opportunities. I think if we look at it from that perspective, I think, where we are, I think there is a different point of view that people come in to think about what are the risks associating with capital, with putting capital into RMG today. I think some of the regulatory clarity that's emerged, but the tax uncertainty remains a little bit of an overhang on attracting more capital to the sector. But I think, like Salone mentioned, I think there's a lot of green shoots in a lot of the other segments of gaming, which is probably getting crowded out, where we see opportunity now, and they're emerging sort of business models that should attract more capital, and we see India establish itself more firmly as a center for gaming excellence globally.
Maybe I can add my perspective as a late-stage investor, ChrysCapital's perspective as a late-stage investor. I'd say, look, given the scale that we typically tend to invest in, real money gaming is probably the only opportunity that we see at the moment. Right? The other green shoots are there, but they may take 5 years or so before they reach a scale. In real money gaming, I have to say, I think the regulatory environment today is not the best. Right? So therefore, as an investor, it's probably easier to wait it out and not put additional capital into this sector today, right? Now, I want to start by saying every industry absolutely needs regulation. We've been investors in several industries that have been regulated, and we see the reason for regulation too. Right? I can take examples of mutual funds where we've been investors. We're an investor in Bandhan Mutual Fund, for example. Financial services, lending businesses obviously have been regulated from every now and then. Healthcare has been regulated as well. All of these regulations, consumer-first mentality, make things easier for the consumer, make sure they don't get ripped off by fly-by-night operators. understand all of that completely. That's totally required. I think the one thing that hurts investors from a regulatory perspective is lack of clarity and lack of certainty, right? So you come up with regulations and you clarify that this is it. We're good for the next 5 years. We've done our bit. This is our, total package of regulations. Investors are going to be happy, right? You can price that in. You can analyze that. You can rely on that. Today, you mentioned 4 or 5 points, Sudhir. Some of them are totally unresolved, right? We don't know what's clearly happening on the SRB side of things. Maybe it's coming, maybe it's not. The taxation front, in 6 months we'll review it. That's what the government said. That doesn't give you a lot of comfort. 6 months could become 12, who knows? And finally, I think this retrospective tax, or I'm just going to call it retrospective tax for lack of a better way of describing it, is obviously a sword hanging on your neck. So I think given that situation, as a smart investor today, you'd probably sit it out and wait for all of this to clarify before you put more additional capital into this industry. And I think at some point, it's going to hurt the industry. So I think that's something the government should be cognizant of and perhaps be a little more clear and, just clearly establish that this is our medium-term regulation and that's it. We're not going to change things from here.
A bit further on that question, because I think it is something on the minds of a lot of people here, right? I think there was a panel from a different industry. I think we were talking about Vodafone idea, the tax bill that came, and the impact that had on investments broadly in the telecom sector and related sectors, right? And that was a big chilling effect for quite a long time. Do you see something like that has actually happened or may be happening right now? Or do you think this is something that will change? Or how do you see this evolving, really?
So I don't want to specifically comment on that, but I will say that Vodafone and the retrospective tax issue that came up then definitely spooked a lot of global investors. So a lot of concerns were raised about, why would something like this happen in India? Some comparisons to is this kind of behaving like China, and that scare saying the government can do anything definitely came up in people's minds. I don't think this is the same situation, so I don't think the two are comparable for sure. But yeah, we're hoping it doesn't go down that road, of course. But that is something to keep in mind, of course. As a global investor, you want to be a little careful of all these things. But look, like I said, let's not call regulation evil, right? It's not evil, it's definitely for the good. Every industry must be regulated, especially new industries. It's just that, you should come up with a comprehensive package and give closure, saying that this is it. That's all.
The reason why the situation's different is that over the course of the last 6 months, we have now seen global strategics become much more bullish on India, actually, right? We have seen Krafton, which is a South Korean games publisher. We have seen Sony Corp, we have seen Mixi, and we personally know of several others who are planning market entry in the India market and saying, hey, we now understand what the government stands on, let's say games with cash-based outcomes, but let's look at the other part of the pie, right? And that part of the pie is actually more interesting for the global publishers, whether it's like the Pokemon company or whether it's Nintendo or whether it's some of the mobile games companies, right? Who are now saying, hey, India's now emerging. And the reason for that is, if you look at global gaming industry, it grew 2%, right? There is an aging population, saturating supply, inundated with content. So if you're a long-term gaming publisher sitting on billions of dollars of a war chest, if you're thinking, where is the next billion gamer going to come from? You're thinking India, because China is not accessible. So that mindset has to be, and what's happening in the India market on the macro level needs also to be understood at what's happening in the macro level as well. And that's why I think the situation's a little bit different.
So I can kind of echo that a little. As a strategic investor, Nazara does make investments, and for us, clearly, there still are plenty of opportunities. But is it fair to then say that it's an exciting market still for strategics, not so much for financials? Or we're not quite there yet?
Gaming has always been exciting for strategics, right? If you look at just data and you stretch it back the last decade or so, and I've been in the industry for 15 years, and I used to be doing investment banking, right? and probably Girish, you'll be able to echo that. 93% of exits in gaming happen via strategic M&A, right? The private equities, the Silver Lakes, etc., they came into Unity at a $2 billion plus valuation. It was carried through by early stage venture and then strategics. But I'm sure, Girish, you have some data on that.
No, absolutely. Look, I think the strategic perspective for the market is where the users are. I think it's the point where you have potentially the youngest population at the scale anywhere in the world, and you have access and connectivity at a frictionless basis and at the lowest cost possible anywhere in the world. So ultimately, it comes down to use cases and developing content which is relevant for that use case. And the only people who can develop that is the gaming companies, right? So in a way, the gaming companies, whether they're established in India or they're finding a path into India by acquiring an Indian gaming company, I think it's a sort of the phase of where we see the opportunity in market. I think the other element of it is actually gaming is a global industry, and we were talking about this a little bit earlier between the four of us, is that you aren't just developing only for India. There are studios in this country that have built scale by servicing clients and gamers in a lot of high ARPU markets as well. So you take game concepts, target your audience anywhere in the world, and you're able to build very profitable businesses at a certain level of scale. So it becomes exciting for gaming companies to consolidate those as well, as you think about additional pools of revenue that you can acquire, but also talent which may not have been accessible at a few years ago. So I think the age of where we are from the cycle of gaming developing, obviously RMG was ahead of the curve, just given the monetization scale and profitability that those businesses were able to generate over the last 3 to 5 years. But we're also seeing opportunity emerge in the non-RMG side, where global strategics are looking at opportunities between both sets of companies to come in and establish a presence, both to cater to domestic audiences, but also leverage India's capability to be a part of their global integrated platforms.
Said about the potential for India becoming a gaming hub, global gaming hub, is huge. I mean, we've seen this story play out very closely, both in IT services as well as pharma, right? Two industries that we are heavily invested in. And this has all the makings of the same, right? We have a great sort of technology infrastructure, tremendous talent, and a huge domestic user base. So those are the raw materials that you need to create a global hub out of India for gaming. So that potential is massive. And we look forward to seeing companies scale up on that story as well.
Let me ask a question again for all three of you, right? So if you think of yourself as an investor for the companies that you're already invested in, what are the most important regulatory points on which you would like clarity in the next 6 months, 1 year? I heard all of you clearly say that clarity is what we need, but clarity on what would you like right now?
So I think, let me go ahead, because I think we've got a bias on RMG. I think the one that we're keeping out more on is to just understand how some of the retrospective taxation issues get resolved. I think that's an overhang for the entire industry, so I think all of us are in it together. I think the other element is just putting together the SRBs and the timelines and the process around that, because that gives you a clear path and visibility on future operations for the businesses. But if you had asked me, I think these two would be top of my mind, at least the way we think about keeping track of developments within the industry that are actively occupying our minds and keeping us up at night.
What Girish said, look, operationally, of course, through SRBs or in another manner, just to sort of, draw that line in the sand, saying that this is what is allowed and this is what is not allowed. And I think then most companies will shift their revenue model to what is allowed, and that will let the industry flourish. So I think that's what we look forward to the most.
I don't want to repeat what Kshitij and Girish have already mentioned. From our perspective, given that we look at the industry much broader, I think there are a couple of things, right, that we would love policymakers and get clarity on policymakers. First would be the ABGC policy, right? We're contributors to it. The task force is yet to be assembled, and the policy is yet to be out. I think it has some fantastic initiatives which would really propel the industry, and it really recognizes the games industry as a vanguard for innovation, right? And I think seeing that come to life would be incredibly important. Also, I think the government has actually done great things around, let's say, esports, and creating esports as a sport and making the medal sport. I think that's already a recognition of a sub-vertical of broader gaming in general. The second, I think, would be around talent upskilling, right? We've seen the government talk about setting up centers of excellence and including game design courses at, let's say, the IITs or the Whistling Woods, etc. But talent upskilling is a very, very key need of the hour, especially if this industry is to grow. We have seen game developers grow from 25 odd game developers just a couple of years back to now. We personally have seen over 1,600 plus studios, right, in the country. But there is a very urgent need for talent because we constantly have to look at the global markets and make those connections for our portfolio. But I think that's something that over the short to medium term should be compensated and be fixed, at least by the policymaker.
I'm going to shift gears a little. So apart from talking about the specific regulatory changes that have happened recently, maybe just a quick 30-second first segue on what is the impact of regulatory changes, right, for investors? Obviously, there are significant impacts on the investments that they've already made, changes the risk rewards of what they had expected from those companies when they had invested. Obviously, because these regulatory changes can increase or decrease the cost of doing business, it changes the economics and therefore potential outcomes from that business. It can obviously also have a chilling effect or a positive effect on potential exits, listings, or strategic buyers. Now, that's all the ways that regulations can affect you. At the same time, it can also create opportunities for new players to come in and break the status quo, and therefore make for new investment opportunities. Along these lines, I have a couple of questions, again, for our panel. So I think first, as investors, what is your core set of expectations from regulators? Clarity, obviously, is one, but apart from that, anything else that you would look for? And any examples that you'd like to share, maybe from other industries or other geographies, where you've seen regulators do a great job, or maybe something that we can learn from, or our regulators can learn from?
Okay, so I can sort of give some context, but not from personal experience. But like I mentioned, I think at my intro, Raine's been an investor in a company in the US called DraftKings, which I think had its own experience of navigating through a regulatory landscape that evolved from being very restrictive to being completely regulated and legalized from the entire transition of fantasy sports to sports betting. So in a way, I think, when I speak to my colleagues in the US around that, I think, they obviously were in the trenches kind of working with the company and the industry, going state by state to the attorneys generals to kind of, work with them, and the way the federalist state nature of the US state works. They actually had to go to this and do it state by state at every court to, get judgments passed in their favor. It's not very different from, I guess, how it is here in India, where you've had to kind of navigate through things on a state by state basis, on a regulatory, landscape of at least appreciating distinctions between game of skills and game of chance. But I think the bigger question is the kind of framework on which each country will look at how they, enforce regulation. And I think we're at that point, at least the sense that I get here in India, that it's still something that is in process. We haven't come into a landing where the regulator, the industry, and the other participants are all kind of aligned in terms of what the clarity and vision for the next 3 to 5 years could be. I think us as investors, we are kind of, derivative of this industry, because if the industry does well, so do we. But if the industry itself is kind of, waiting to, get to a landing on some of these matters, the only thing that we can hope for is, we can try and be helpful and leverage our networks to kind of, be connecting the dots. But I think the way I look at my role out here, it's more like, to support the industry as opposed to be able to kind of determine, what's the right regulatory framework that gets delivered. So I think, there's the challenges that are global tend to be global because every country has its own approach to how these, how RMG and other aspects of gaming get regulated. I think the approach that we are in India is something that we're all kind of, navigating to together in real time. So, I think it's a pretty vague answer, but I think the summary of it is, I don't know if there is a good or a bad regulator. I think there is a regulator, and we all have to adapt to what gets thrown at us.
I'm happy to provide some global, parallels. Look, I think ultimately, what any investor requires is not just clarity, but also ease of doing business, right? And one is ease of doing business, and and a corollary to that is how do you then propel businesses? Now, within the games industry, there are several parallels in the global markets, right? The UK, for example, has the VGTR, which is the video games tax relief. As an entrepreneur, I've been a direct beneficiary of that, where every dollar that you spend on R&D or payroll developing games within the UK government either gives you a tax relief on it or actually a direct cash back. So that actually goes back and then goes back into further development. Finland has Tekis. In fact, people don't know this, but Supercell, actually their first money was LVP, initial capital, and Tekis. That was the government which actually gave Supercell its initial grant money. That was at a $2 million valuation. They raised the next round at 12 million. The next round, where they sold half of their company to SoftBank for 5 billion, and then they sold for 10 billion, 70% of the business to Tencent at 10 billion. So there are these parallels. Every market globally, whether it's Germany, whether it's Poland, whether it's France, Spain, for example, has these models of easing business for young game developers, and at the same time also helping them with, whether it's financial SOPs or rebates or even accelerating, let's say, investor participation in these companies, right? So I think there are many, many parallels. This has also been our contribution to the AVGC policy as well, that we've provided some of these benchmarks. So it'd be great to see how that kind of pans out.
For a second, to clarify for those who couldn't hear clearly, that investment was 2 million with an M, and the exit was 10 billion with a B.
That's right.
In a fairly short time span. So that's part of the reason why people get excited about gaming. But sorry, Kshitij, you were saying.
And in a span of 3 years, by the way.
In 3 years.
So.
I don't have much to add. I think Girish and Salone have covered it quite well. I was just I think I already drew a parallel to the mutual fund industry and how regulation there really helped ease up the industry for the consumer. I think the specific example that I'm thinking of is in the mutual fund world, distributors used to get a commission every single time a user opted for a new fund, right? So it almost encouraged most distributors to keep switching users, right? So stick to a mutual fund for a year or two and then switch over because I get more commission. And that was the whole incentive structure for the distributor. And when they changed that regulation, they regulated that and said, look, you will be paid at the end, not in the beginning. That changed the industry dynamic a lot, right? So I'm just trying to draw a parallel to that, saying that, look, regulation is often good. And in this case, it was clearly good. Obviously, the industry had to change the way it operates. But it ended up being more of a positive for the entire industry. There was more stickiness in the industry, so to speak, for mutual funds, especially ones that were performing decently well in terms of the returns given to the investor. And in the long run, it ended up benefiting the industry. Although in the short run, people were like, oh, we have to change our business model a little bit, etc. But I think the clarity and the purpose with which they changed that regulation was commendable. And so I just want to draw that one example out there from another industry, since that was one of the questions you asked. On how others have done it, as an example of what we can look forward to, hopefully, in gaming as well.
I think that's as an investor, how do you work with your portfolio companies where you've invested on how do they adapt to some of these regulatory changes, right? So is it reactive, as in if regulations have changed, then obviously they do have to change their business model and structure. But in some cases, do you also try and get them to change in advance or in anticipation of regulatory changes?
I think the one thing that's happened given all the developments of 2023 is that it's really brought the industry together. I think, with FIFS and e-gaming federation, everyone trying to like work together to kind of address matters which impact them all, which maybe wasn't the case in the previous to any of these challenges, because I think everyone was then looking at solving specific pain points that were relevant to them as a company or relevant to them as a sub-vertical of the gaming industry. I think, one positive has been that the industries come together to kind of work collaboratively with each other and the government to kind of address some of these matters proactively. So, I think the way I look at it, it's something that's going to continue through 2024 as well. And platforms such as this are good to be able to kind of get the industry together and talk about things that you maybe would not have a platform to discuss otherwise.
Yeah, look, as a late-stage investor don't typically get involved in the day-to-day operations of our portfolio companies. So we're generally more involved on the strategic side, M&A, org structure, key hires, entering new verticals, etc. But I would say that, yeah, we encourage our portfolio companies to be aware of what can happen regulatory-wise proactively, and have a backup plan, etc. But I think it would be a bit difficult to be proactive about every regulatory change. You have to be reactive to some degree as well. But yeah, that's how we sort of that's the advice we give most of our portfolio companies. Be aware of what the global norms are, of how regulation can change for your industry based on, just common sense most of the time. But at the same time, you can't proactively apply something, because if the whole industry is working on a certain set of rules, you can't play by some other rules. It's a bit difficult to do at a late stage.
So early stage companies, do you have a similar view or a different?
So I think our view, because we're very early stage and our companies are, the 0 to 1 or the 1 to 100 stage, right? So our involvement is a little bit higher, and actually I'd say much higher. Because capital is only one of the problems that the founder faces at the early stage, right? There are many, many other challenges. And regulatory developments are obviously something that, as much as founders would like to keep abreast of. And, I think probably at the later stage, founders get more sophisticated, but often at the earlier stage, they underestimate the impact of regulation on their business. So that's something that we proactively help founders. So for example, when there were the social intermediary platform norms that came out, we did a session with some of the lawyers to help our companies figure out, are they going to fall under it or not. Similarly with the data protection norms that have come out as well. So I think we have to play a little bit more proactive role. And I think that's our job and our remit as an investor to be able to do that, and then hence educate our founders.
Slightly different topic, again specific. So as an investor, again, do you think the recent regulatory changes in India, whether it's GST, whether it's the privacy-related laws, intermediary, do you think these are leading to opportunities for new players to come and go up against the incumbents, or not really? Do you see it really as an opportunity or purely as a risk today?
From an investor perspective?
From an investor perspective.
Look, I mean, definitely clarity emerging at the point that it does creates opportunity. I think the lack of clarity is where there is uncertainty, and we're kind of in that in-between phase right now. I think there was movement towards a regulatory environment which was conducive for the industry to grow. I think the questions on taxation, particularly around GST to be applied retrospectively, put some, challenges in the way the people could, any investor could underwrite an investment in the industry. I think where we are, it certainly feels that going into 2024, as soon as there is more clarity emerging on how some of these questions get answered, it definitely opens it up for more opportunity for other investors to come in and evaluate either existing companies that are established at a much later stage, but also business models that are kind of relatively early, and it gives all of us opportunity to talk about our portfolio companies or our associations with investors in other markets as well. Because the question on doing something in gaming in India doesn't go away. The question is, when should we do it? And I think we're all waiting for that when moment and not if moment right now.
You know, I think it's neither an opportunity or a challenge. It is what it is. This is the norm of the land. So I think it is far easier for newer companies to come knowing fully well what are the regulatory pitfalls of building a business, and then being mindful of them and navigating through it, as opposed to being an existing player who now has to adapt. So, being adaptive and being resilient at the same time is going to test the old players. But if you're a new player and you're coming in, you know the rules, right? So, it is what it is.
I don't think I have much to add. I think this is pretty much covered it all.
So today, if you look at the Indian gaming industry, I guess there's the freemium kind of a segment, there's subscription, and within RMG, then there's Rummy, there's fantasy sports, there's poker. Maybe there were a couple of emerging segments around, say, trading and others. With these regulatory changes, do you anticipate either new segments emerging within these or new companies coming in which will actually challenge some of the larger incumbents in this? Or it doesn't really have an effect at this point?
I think it's what Girish said, right? It's when there's regulatory clarity, there will be opportunity. So regulation always creates opportunities as well as challenges, both. It is what it is, as Salone said. But that is when there's full clarity. And right now, I definitely say, most investors in the later stage will be on a wait and watch mode. When that clarity does emerge, there will be enough opportunity to create new segments, to change your revenue model to one that suits the regulatory environment a lot better, etc. Right now, I think most folks would be on a wait and watch mode.
I think it's what we call stroke of pen risk, right? I think at this stage, nobody wants to have any exposure to that. So I think it's wait and watch. Yeah, I'd say that's probably
lots of green shoots, though. Green shoots with recognition of gaming as an industry, and a lot of that coming through. Is just as an investor, you'd rather wait for full clarity before writing the large check, basically.
No, I think we're very close to the ground, and over the course of the last, I'd say, year or so, we have actually been more active. And there are two reasons for it, right? One is there's an industry beyond RMG, right, which is growing, and it's growing incredibly fast. And we're seeing a migration of users happening. There is growing propensity to pay, which is now being reflected in the data. On the App Store now, prior to Fantasy being launched, 50% of App Store revenue was being contributed by games. This is very, very close to the global average, right? It's a little known fact, but it is true, right? We are seeing companies like, from a Moon Active with Coin Masters grossing about $20-30 million in the India market of a download base of just 2 million users, right? No longer is gaming now an urban phenomenon. As per our research, there is an increasing propensity for gamers' share to come from non-urban areas, right? Free Fire's biggest market was Surat, Ahmedabad, Bhopal, and several other markets, right? And these people were spending microtransactions, in-app purchases. So there is definitely green shoots to build in this space, right? Because so far, India's been importing content. We play global content, which has been the case in every medium. So if you go back and think television, when satellite happened, we grew up watching American television. We saw Beverly Hills, and we saw 90210, and we saw Bold and the Beautiful. And then there was an era where Balaji happened, and domestic mass consumption of entertainment and content transpired. That moment has to happen in India, which is happening. And the second big shift that's happening is there's an exodus of talent which is coming from, let's say, RMG and saying, hey, we no longer want to build, but we want to build on the other side of the pie. We're seeing opportunity there. And that is incredibly exciting, right? Because now there's talent, and there's also a lot more global investor interest. There are 50+ specialist gaming funds in the world, whether it's the Griffins, the Makers, the Bitcrafts, etc. They're all now starting to look at India much more aggressively than they were before. So when you put all of these points together, there's much more activity at the early stage, seed stage, which is happening, which obviously then takes a little bit more time to then reflect at the growth stage, right? Maybe 2, 3, 4 years. But that activity is already happening on the ground.
Slightly, maybe the last question really, running out of time, but I think it's a well-known fact that globally, the gaming industry is larger than music, movies, TV put together. In India, we are nowhere near that. Gaming is much smaller than those industries, maybe even individually today, right? Do we see that scenario changing in India in the medium to long term? And if so, what will trigger that? Is there any regulatory items around that, or is it just natural evolution or some other triggers for that you see? Salone, this is probably up your street, absolutely.
I think it's an evolution of the market, right? You can't push the natural evolution, right? Now, I can give you a parallel of China. I used to cover China gaming, right? In 2004, Chinese the foreign titles used to contribute 60% of downloads and 70% of revenue, right? China was a services market. Everybody said it was a piracy high market. There's no way Chinese people are going to really pay money for games, right? But a couple of things happened in China. 3G happened, digital payments happened, the CCP really pushed gaming for Make in China. A couple of gaming companies went public, Perfect World, Kings, a bunch of those companies went public. NetEase launched a title which was, Fantasy Westworld Journey. And by 2007, the Chinese games market was about $1 billion, grossing in IAP revenue, and 70% of the revenue came from domestic titles. So the market completely shifted. Now, I don't think India will move as fast as that. Or maybe it has, in the last 5 years, we've seen IAPs 5x already. But is it China pace of development? Who knows? If I did, I would be betting on horses and not companies. But I think we're seeing a lot more signs. And I think, you only read the data. Opinions are a dime a dozen. But eventually, I think the data speaks for itself. And in another 2-3 years, I think that opportunity will start becoming more obvious to the broader industry.
Girish?
Yeah, I think it's going to be impossible to kind of take a point of, pin it on a Excel sheet and be like, this is the point where there's, tips over. But I think you have to look at, user behavior and user trends to kind of take a view on like at what point does gaming, be equivalent to any of the other media and entertainment industries, right? Yes, in India, television continues, I think, to be the largest aspect of media and entertainment, but, it's got a single-digit CAGR growth over a 5-year period, right? So I think at some point, you've got to think about gaming, growing at the clip that it starts moving up in terms of the tiering, and then at whatever point it starts kind of scaling over to be the largest form of entertainment. I think the user base is already there. It's a question of like when the monetization follows those users. And I think as more and more opportunities for monetization and alternative revenue streams become emergent, you'll start seeing that people are willing to pay to play, people are willing to consume more ads, there's better targeting, higher ARPUs coming out of that. All of that kind of follows the technology around gaming being built in market as well. I think Salone kind of hit the nail on the head when she said that all the activity that's happening is happening at that sort of relatively early stage. But the minute these things kind of start becoming visible, you'll see, people at my end and Kshitij's end of the world lining up to put more capital behind them as well. So I think all of us are equally excited. It's just that we're looking at it all from different perspectives.
Yeah, look, as an Excel sheet junkie and analyst, I'd say it is correlated to GDP per capita, and we've seen that play out time and again. There's no exact point at which there's a inflection point in your GDP per capita curve. That's hard to predict. But look, there's also a socio-cultural element, right? There's always a socio-cultural element. In China, it was really sort of not looked upon as a taboo. Gaming was really encouraged as a way of expressing yourself, etc. So that socio-cultural phenomena help in China. I think in India also slowly it's happening where that whole age-old taboo of gaming being a waste of time or words like that being associated with it as a gamer. I think that's slowly shifting. That's moving away, and it's genuinely being seen as a upgraded form of entertainment where you use your mind, right, rather than not use your mind. So I think when that socio-economic socio-cultural, wave rolls through, and it looks like it is in a big way, I think that's when this really takes off. That combined with your basic economics, which is GDP per capita.
We're out of time, but I'm just going to request each of you to maybe just, if you have any closing comments, I'll go back to the topic, which was investor insights. How can the industry build through regulatory shifts? Anything you want to summarize or close out with? Apart from, as an industry, we want regulation and we want clarity, which clearly is a theme which came. But
I think that's pretty much the summary.
So look, no closing comments. I think, just if you want to rehash the entire session, it's pretty much saying that, look, regulation is good, it's required. The sooner you have clarity on it and the sooner it's established that it is for the medium to long term, the better it is in terms of, attracting capital in an industry. So I'll just summarize it by saying that, yeah.
I won't comment on regulation. I'll just say that, look, 50% of India's population is under 25. They have learned to swipe before they type, and they will determine what the future of gaming and entertainment and what the next generation of companies will look like over the next decade.
That positive note, I'll say thank you to my brilliant panelists, and I hope everyone here also got some interesting insights from three very different kinds of investors with their own views and very useful insights. Thank you. Thanks, everyone.